Hi, this is Efrem Hoffman broadcasting live from NakedSwanTrading.com on May the 31st, 2012 at 2:39 a.m. in the morning. The reason why I am broadcasting this late into the evening is because we have a very critical risk window and warning to announce. Actually, it's warning number 2 on symbol AAPL. And we first warned about Apple computer stock having a major sell-off following the April 10th area where it was making a high in and around that period. And upon breaking the $633 level, it suffered a very sharp fall as expected. Well, now we're getting our natural retracement in the downtrend, and we are now revisiting some very similar market setups that were in place just prior to the main reversal that occurred off of the near $640 high. I do expect that the vulnerability of Apple computer stock going forward is exceptional, especially considering that the world economy and stock market indices are deteriorating rapidly. And this could be a situation where Apple and the rest of the NASDAQ and Dow and S&P equities suffer a serious blow as we extend into the first days of June, and especially again in the middle of July through early August. Okay? But right now, what I'm seeing on the screen is a confluence of zero momentum boundaries that's basically telling me that if price gets underneath the $573.19 for more than 13 minutes at any point after 1:37 p.m. on May 31st, 2012, then there's going to be enhanced risk, and market liquidity is going to become skewed to the sell side upon crossing that point. So it would be natural at that point for the market to try to progress down to the 564.45 area. Obviously no big deal. We call this the volatility attack point because upon getting underneath that level, at any point in this red risk box, which we call the critical risk warning for Apple, or the risk window, the height of the box is defined by the critical overhead resistance, which is between 585.47 and 589.47 in the event of a spike. There's no need that it has to go up there. We're entering a very weak period, and it looks like 582.61 is a natural first line of resistance. And anywhere, and you can see here the white line, which acts as resistance, pretty much is right on the current price, and then it kind of increases slowly and then starts drifting down. So if this market can't actually push up to this level, it's going to be then contained under the purple line. If it can't do that and it gets on the other side of this one, it'll be contained by the teal, and then eventually it's going to be below all of these boundaries, and that opens up a gap down to that critical volatility attack point. And the danger of such a point is that it opens up an initial down move to the 552.25 to 557.39 area. Once we get underneath that 557.39 area and stay underneath there for an entire bar, or just trading below that area for more than 13 minutes, then there is a high risk of a toxic volatility event occurring beyond the period of 11 o'clock in the morning on June the 4th, okay, and still very enhanced into and around the June 6th area, and tremendous follow-through from there. Retracements upon getting underneath that 557.39 area would likely be limited to the 565 level at best, as the market tries to descend towards its first tail risk attack zone at 526 to 531 defined by this red line. Unfortunately, this red line is sloped up, so into the period of the 7th, if we do get underneath this critical area, 526, that could lead to substantially lower levels into the $450 zone. We'll have to watch that closely, but in the meantime, this represents the near-term risk in Apple computer stock. So stay tuned at nakedswantrading.com, as well as our Twitter feed on Naked Swan Trader, which is also available on the side of our webpage at nakedswantrading.com. Be sure to follow us on our weekly updates, which we provide every Sunday or early morning Monday, so that you could stay in the loop of critical market breaking events. Also, be advised that we have a new subscription service that's going to be available to traders, and that will provide high-definition risk maps of elite opportunities in the equity, currency, and futures markets. So stay tuned, and we will notify all at the front of the website, as well as you could sign up at the top of our website, and if you do sign up, then we will be providing you with webinar updates and critical information when we see market-breaking events happening. So I thank you all for joining us here today on May the 31st, 2012, with the cast ending at 2:46 a.m. Thank you.